This is Market Lens for Thursday, June 25, 2026. Today's map is split. Japan equities and real estate still show the cleanest constructive setups. Metals are deeply oversold but choppy, and U.S. equities are mixed beneath the surface. The real pressure is concentrated in China equities and crypto, where downtrends and weak momentum remain front and center. Across today's Market Lens ranking, Japan equities and real estate sit at the top with opportunity scores of +2, supported by uptrends and normal volatility. Metals are positive but range-bound, while Hong Kong and emerging markets remain more neutral. U.S. equities are mixed with elevated volatility. China equities and crypto sit at the bottom, where weak trend structure and downside risk dominate. Japan equities hold one of the stronger setups in today's Market Lens. The trend is up, volatility is normal, and the opportunity score is +2. EWJ remains above both its 50-day and 200-day averages, which keeps the broader structure constructive even after a modest short-term pullback. Supportive themes include corporate reform, earnings resilience, AI-related supply chain exposure, and global diversification outside the U.S. The main risk is that strong prior gains can make the market more sensitive to yen moves and profit-taking. Bottom line, Japan remains constructive but not immune to cooling. Real estate also shows a constructive profile with an uptrend, normal volatility, and an opportunity score of +2. VNQ is above both its 50-day and 200-day averages, and the recent 5-day move is positive without looking overly stretched. Lower yields can support rate-sensitive assets, which is a helpful backdrop for real estate. The caution is that borrowing costs are still elevated compared with the low-rate cycle, and this group remains highly sensitive to inflation data and interest rate expectations. Bottom line, real estate looks steady and supportive, but rate risk still matters. Metals are sideways with mixed volatility and an opportunity score of +1. Gold and silver both showed positive one-day moves, but the 5-day losses are still steep, and both remain well below their 50-day averages. Silver is the more unstable piece of the group, with high volatility and a very oversold stretch. Softer yields and a weaker dollar can help precious metals, while renewed dollar strength or higher real yields would be a clear headwind. Bottom line, metals have rebound potential, but this is still a choppy setup. Hong Kong equities are sideways with normal volatility and an opportunity score of +0.5. The setup is orderly but not especially strong. EWH remains oversold and sits below both its 50-day and 200-day averages, which keeps the technical picture weak. Tailwinds include normal volatility and the possibility of short-term stabilization from oversold conditions. The key headwinds are China growth uncertainty, policy confidence, dollar sensitivity, and cautious global risk appetite. Bottom line, Hong Kong is not in panic mode, but the recovery signal remains limited. Emerging markets are sideways with normal volatility and an opportunity score of 0. VWO is close to its 50-day average and still above its 200-day average, which creates a balanced but not forceful setup. The positive side is that longer-term support remains intact and volatility is controlled. The challenge is that the 5-day move is negative, near-term momentum is soft, and emerging markets remain sensitive to dollar strength, rate expectations, and China-linked weakness. Bottom line, emerging markets look balanced, but the directional edge is limited. U.S. equities are mixed with elevated volatility and an opportunity score of -0.5. SPY and QQQ remain in uptrends and above their 200-day averages, which keeps the broader market supported. But underneath the surface, GOOG and NVDA are more choppy, with both below their 50-day averages and showing elevated or high volatility. AI and semiconductor demand remain important tailwinds, while valuation sensitivity and rate expectations remain key risks. Bottom line, the U.S. market is still supported, but leadership is uneven and less clean. China equities remain under pressure with a downtrend, normal volatility, and an opportunity score of -1.7. MCHI is well below both its 50-day and 200-day averages, and the 5-day decline is meaningful. Normal volatility suggests the move is not disorderly, and oversold conditions can create rebound risk. But the larger issue is still weak trend structure, with growth concerns, property sector stress, policy uncertainty, and geopolitical risk weighing on confidence. Bottom line, China equities may see relief attempts, but the regime remains fragile. Crypto is the weakest area in today's market lens, with a downtrend, high volatility, and an opportunity score of -2.7. Bitcoin and Ethereum are both deeply below their 50-day and 200-day averages, with severe 5-day declines and very oversold readings. That creates the possibility of sharp relief rallies, but the broader regime remains high risk. Pressure is coming from weak risk appetite, fragile liquidity conditions, and concerns around fund flows. Bottom line, crypto is deeply oversold, but the trend and volatility profile remain defensive. Go beyond the highlights. Get the full Market Lens report in your inbox. Powerful AI-driven insights on global markets, critical news, risks, and opportunities to help protect and grow your money.